Thanks for joining us from the Ohio AgNet Voice You Know with the News You Trust studio, sponsored by BASF, where performance of Veltima fungicide can take your best result even farther. I am Allison Kinney. Good afternoon. If you can't tell from the sound, I'm at the Ohio State Fair in the poultry barn. Today is Market Chicken and Turkey Show Day. The exhibitors just finished up their classes and are eagerly waiting for the grand drive. While we wait, let's take a look into the headlines. Union Pacific will buy smaller rival Norfolk Southern in a deal worth $85 billion. It would combine Union Pacific's track in the western two-thirds of the U.S. with Norfolk's 19,500-mile network covering 22 eastern states. The two railroads would have a combined enterprise value of $250 billion and would unlock about $2.7 billion in annualized synergies. The deal will likely face lengthy regulatory scrutiny aimed union concerns over potential rate increases, service disruptions, and job losses. The National Grain and Feed Association says it will undertake an expensive evaluation of proposed merger to better understand the implications for the industry. Also in the headlines, hog slaughter during the 4 weeks ending on July 26th was 3.7% lower than a year ago. That was far lower than the expectations based on the July hog survey. USDA has also lowered some of its initial slaughter estimates. In the near term, pork supplies will remain limited, impacting primarily processing items as buyers need to run consistent production. Ham, trim, and belly prices continue to be well supported. Retail fresh pork sales have been slow despite record beef prices. Loin values are near year-ago levels, while pork butt and spare rib prices have started to seasonally decline and should see more downward price pressure as slaughter moves higher in the fall. Ham prices continue to trade very firm given the shortfall in production. Belly inventories were particularly tight, falling to 44 million pounds in late June. Tariff uncertainty with Mexico has some buyers on the sidelines. Rounding out the headlines, the ending stocks to use ratio for corn has decreased due to a smaller than expected 2023 crop and strong corn usage, particularly in exports. As Todd Glenson reports, this led to a shift in what farmers expected the market price of corn to do.
Ending stocks and the stocks-to-use ratio are really just two ways to summarize everything we know about the state of supply and demand in a particular commodity market. So for corn, the facts on the ground tell us the supply is tight. Very tight by those two numbers. But, says Joe Jansen from the University of Illinois, does the market need higher prices to ration out what's left of last fall's corn harvest? Probably not, for two reasons. The first is that while USDA lowered the size of last fall's corn harvest in January, demand for the crop has continued to grow through the first 6 months of this year. This has both the ending stocks and stocks-to-use ratio indicating higher prices. Still, it comes so late in the season, and this is the second reason, that the Safrinha corn crop harvest in Brazil and the eminent United States bumper crop fall corn harvest have the market confident it can make it through to September, says the ag economist.
That's absolutely right. We're in a situation where when we get down to the end of the marketing year, things can get kind of highly variable because of, there's this very temporary short-term imbalance between maybe supply and demand in particular locations and at specific moments in time.
Meanwhile, the futures markets do not need to move higher to ensure enough is available. This leaves it up to the cash market, where needed, to pull corn from reluctant sellers. Iowa State University ag economist Chad Hart says farmers must watch their local basis and decide how to allocate available storage space, selling some or all of those old crop bushels to the highest priced local market. He's also concerned about new crop corn and wondering if the demand binge will continue.
I'm fascinated by, let's call it the strange trade that we're in. The idea is we're continuing to see export pace on old crop look really good. Will that translate for us as we're looking for new crop? Because we're going to need that international boost to work through these larger crops we think we're bringing in this fall.
USDA will release its first crop production report in August. Its current corn yield is 181 bushels to the acre nationally. The trade has a number as high as 187. For University of Illinois Extension, I'm Todd Gleason.
Now let's take a look at those closing markets. This market report is brought to you by Seed Consultants. Simply better performance. Learn more online at seedconsultants.com. September corn closed in today up 2 1/4 at $3.94. December corn up 1 1/2 at $4.13 3/4. March corn up 1 even at $4.30 1/2. August soybeans down 6 even at $9.61 3/4. November soybeans down 6 3/4 at $9.89 1/4. March soybeans down 6 3/4 at $10.24. September wheat down 1/2 at $5.23 1/4. December wheat down 1 3/4 at $5.42 1/2. March wheat down 2 1/4 at $5.60 3/4. August live cattle down 5.30 at $227.77. October live cattle down 6.57 at $223.17. And August lean hogs are up 10 cents at $107.12. Thanks for joining us. I'm Allison Kinney, and this is the Ohio AgNet.